If there is one thing I'm not good at in my business, if I had to pick one, it's money and finances. I know. I should be. I just am not. I suck at it. Actually, I started college as an accounting major and very, very quickly changed my major because I was like, this makes my eyeballs like, and I can't figure it out. I am not good at finances or money, but thank goodness I don't have to be, because we have people like Jenny Fox in this world who can teach us all the financial things for business owners and make us feel a little less cross-eyed when we're trying to figure out all the financial things. So we're going to welcome Jenny to the block to talk about monies.
Thank you so much for having me. I'm so excited to be here and to share with you guys the top financial metrics that every business needs to use and measure and look at to ensure success. Now, I know success is a funny word, right? Because success to one person is not the same as the other. But for me, looking at your financials, you will be able to build a sustainable business that not only creates freedom, but builds wealth. And we want to ensure that you are building something that is scalable and that can grow, that is sustainable. Now, I am a firm believer that business is all about the financials. Financial foundation is the key to start to figure out what is and is not working in the business. We can use this data to make informed decisions, to understand where we need to go, what we need to reach for, and how we're going to get there. We can do this by the top 5 financial metrics that every business owner needs to be looking at on a monthly basis. Okay, so what does that mean? I know it's overwhelming. There's lots of numbers, but I think we can simplify it for you. With that being said, I want to let you know that we need to be looking at this as a holistic view. None of these metrics stand alone. I highly suggest using all of them to measure your business on a monthly basis. So the top 5 metrics are revenue, profitability, cash, debt, and leads. Now, let's dive into number 1. 1 is revenue. Now, revenue is a great indicator of how things are going. It is the total revenue, the total income that you are producing for any good or service in a given period of time. But with that being said, it is also the biggest vanity metric that you see all over social media about, oh, I just hit 7 figures. Oh, man, I just hit 6 figures. And everybody's striving to hit these large revenue goals. I think with the holistic view, with not only revenue, you can come up with whatever number you need. We need to understand what you need personally, not what the world says you should have. With revenue, I like to look at it in a few different ways. I like to look at it, 1, by the offer. I want to know what offers are bringing what amount of revenue in. So if you're using QuickBooks, Xero, another accounting system, or maybe a spreadsheet, I would really want you to break the revenue down by the different offerings you have, so you can fully understand where you're making the most revenue. And what I like to do is really tie that back to how much I'm personally having to lift to make that revenue. Another thing I like to look at with revenue is, how are we growing? Is revenue up year over year? Is it down? Are there any reasons? What can we tie it back to? Again, I think you can look at this with your offering total revenue amounts, because you can see what offers are working and what are not. Another thing I love to look at in the revenue department is, do we have monthly recurring revenue? And if we do, how much of your total revenue is that? It seems like a little bit more of a security blanket of having that monthly recurring revenue. Okay, so enough about revenue. Revenue is super important, but we also need to know exactly how much it costs to produce that revenue. And next is my next number, is gross profit. So what is gross profit? Gross profit is the revenue minus cost of goods sold. So what are cost of goods sold? Cost of goods sold are direct expenses to produce a good or service. Let's just take a makeup shop. Somebody that makes makeup. They're gonna have expenses in the jars, the product that's inside the jars. Those would be their direct expenses. Those would be their cost of goods sold. Okay, so it gets a little bit more complex for online business owners. So for those, we're gonna take a look at, let's just say a one-on-one coach that produces a course with a group coaching program. Okay, so what are their cost of goods sold? Their cost of goods sold are, if they have a sales rep, the commissions they pay the sales rep to make the sales for the one-on-one. It would also be the software used to host the course, the communication platform used to communicate with their group coaching clients. Those would be the cost of goods sold for an online coach or course provider. Another thing to look at with gross profit is gross profit margin. So what is that? Gross profit margin is the gross profit divided by gross sales. Now, what does that tell us? It gives us a percentage, and we want that percentage to be between 50 and 70%. You will be golden if you're closer to the 70%. That means that you are efficiently operating with your resources to produce income. This tells us a lot. So if that number drops under 70% or 50%, we really need to look at our pricing. Are we priced correctly? Do we need operating procedures in place to make this more efficient? Is there something we can automate? These are questions we would ask if that number is lower than 50%. Now, my favorite number is net profit. So net profit is gross profit minus our operating expenses. That is net profit. It also is called net income. This number is extremely important. 1, this is what you pay your taxes on. 2, this is going to be how you pay yourself and reinvest in the business. So this number is really important. It also tells us the performance of your business and how well you are performing. It takes into account the entire overview. Revenue, direct expenses to produce that revenue, operating expenses, net profit. So what is operating expenses? This would be rent, office supplies, admin fees, any salaries paid that aren't directly related to services. This could be coaches, consultants, accountants. All of these are operating expenses for the overall business. So when we're looking at net profit, we are able to tell, are we ready to expand the business or do we need to cut expenses? So net profit is extremely important. We want to look at it in relation to gross revenue. So it doesn't always mean that if you sell more things or make more revenue, that your profit is going to go up. It is highly important that you understand net profit and you are looking at it on a monthly basis to ensure that it is in line and that it is growing. Okay, so we're on to number 3 because we've talked about revenue and we've talked about profitability. So the third thing we're going to talk about is cash position. So this would be bank accounts, savings accounts, any kind of cash that is liquid. Every month we want to look at how much cash do we have in the bank. Now, with that being said, sometimes business owners put too much stock into the cash in the bank. This can be a problem when there are a lot of liabilities or debt to be paid or big expenses that are coming up. You may look at the bank and say, whoo, I've got all this money, fantastic, I'm sailing, I'm actually doing this thing, but then that huge bill comes up or the tax bill or whatever, that large bill you weren't expecting comes up and then your cash is depleted. So what we want to do here is we want to ensure that you have the cash reserves to be able to support any type of recession, pandemic, any type of downturn. We want to make sure that if you didn't make any sales for 3 to 6 months, you have that money in the bank to cover those expenses. Believe me, it's so much less stressful to have that money in the bank sitting there ready to be spent when things aren't going right. Because it's not a matter of if that happens, it's when that happens. And I think that was proven in COVID. Because if you didn't have the cash reserves you needed, it became a major problem. So we want to make sure we are saving up for those cash reserves. Now that we have our cash under control, we want to take a look at that and see how much we have. Another thing that is a indicator of financial health is the debt. And we want to look at a few things within debt. We want to look at the total number of debt, but we really want to look at what type of debt do we have? Is it long-term or short-term? Is it destructive? So what that means is short-term is anything under a year that has to be paid back. Long-term is anything over a year. Destructive debt is what I like to consider anything that is debt that is not income producing. For instance, credit card debt, a car, those types of debt is what we really want to look at. And anything over 6% interest rate, we really need to look at. We also want to make a plan to get that paid down. Now, if you have assets that you've invested in that you're carrying debt on, that are income producing, we just want to keep an eye out on it. We just want to know how that looks compared to like where we were last year. And we just want to make sure that we are tracking that, but really want to look at the destructive debt and how much interest we are paying. So on to the last thing. Now, it's not going to be something you're probably going to Google and say, oh, financial metric, that's it. When I said leads metric, these are financial metrics. It's just with leads. So as an online business, marketing is super crucial to our business. And so we want to know about our leads and how that goes with our financials. So what we're going to look at here is our earnings per lead and our cost per lead. Our earnings per lead is how many leads have come in the door. So let's just say you are about to launch a group coaching program and you are going to do that through a webinar. So if you have a webinar and 1,000 people will register for that webinar and your revenue for the offer, the group coaching offer, is $100,000, then your lead earnings per lead is $100. So what does that tell us? Right? Like, one, it tells us, do we have a viable offer? It also tells us what we can expect to earn from each lead that comes in the door for that offer. It also helps us determine what we can spend the next time on ads and to get more leads. So we want to look at those three things. We want to look, okay, was the offer good? And if it wasn't, if that number's low, like let's just say under $20 per lead, you really want to look at your messaging, the way it was offered. Did we get in front of enough people? Are we targeting the right people? You also want to look at, for instance, let's go back to the example, $100 per lead. If we have $100 per lead, then we know we can spend what we can spend on ads to get there. You're not going to spend $90 to get one lead, right? So you want to calculate that cost per lead because you want to analyze it with the earnings per lead to make sure those are in line, that you're still having enough to produce the income you need to make the bottom line and to grow a successful business. That's why I've included the lead metrics in here, because I do feel like it is super important because it tells us a lot about our offerings and what we can expect per lead to come in. Okay, so that was a lot of metrics, right? So we have revenue, profitability, which is gross profit and net profit. We have cash position, debt, and lead metrics. That's a lot of metrics. So there was actually a little bit more than 5 just because of the extents that I like to look at things. So if I'm you and I've never done any tracking before, or I'm not tracking financials periodically, let's start by tracking these 5 things just at the basic level every month at the end of the month. So if you have a bookkeeper or you don't, take a look at your financials. You can find those numbers on your profit and loss and in your balance sheet. But all in all, you probably know most of those metrics. You can quickly identify those. And let's get a spreadsheet going with those 5 metrics. And so you can start to look at how they are varying and what the patterns are. We want to take a look at these metrics on a consistent basis so that you can really start to make those decisions that move your business forward in a more sustainable way. I would love for you to comment below any big takeaways, what you're currently measuring that I didn't mention. I really would love some feedback on what's working well for you or where you can need support on the financial side. So please comment below your biggest takeaway and we'll see you soon.